Welcome to Live Better Longer. I'm your host, Bill Borton. I'm here this week with Bob Connell and Joe Weidenburner from Apex Advisors. Bob is the visionary founder of the firm with over 40 years of financial planning experience, and he holds the CFP designation, one of the first people to hold that designation. Joe is an investment manager, an author, a hedge fund person, and brings extensive investment experience to Apex. Welcome, gentlemen.
Thank you, Bill. Good to be here.
Thank you, Bill.
So, Bob, tell me about Apex.
We founded Apex about 5 years ago to basically address client needs. We felt they wanted a fiduciary type of standard, which means we're always going to act in their best interest. I've been in the field for over 40 years, and we felt this was a better alternative for our clients to be able to have that fiduciary and that independence that we think most clients would like today. So we're very happy and pleased to be able to offer that service to our clients. Most of them are higher net worth. Apex also utilizes a number of different services, and Joe's going to get into a number of those. And so I think we're very pleased to be here with you, Bill, and we're very pleased to talk about Apex and what we provide to our clients.
Thank you. So a lot of what Bob just mentioned, Joe, I've heard from other financial advisors.
Sure.
So what sets Apex apart?
Well, financial advisors are a dime a dozen, and we like to in-house use the analogy of a Jersey Shore beach on the 4th of July, right? It's usually so crowded that you can't find a place to sit, you can't even see the sand. We approach it, what's going to differentiate us from everybody else in the industry? And I think what sets us apart truly is the depth and breadth of service that we provide to our clients. We provide tax planning services, tax guidance, estate planning management. Typical financial advisors from big corporate shops, they're going to meet with you once a year, review your net worth statement, and put you in a few mutual funds. That's not the approach that we provide at Apex. The questions that you should be asking your financial advisor are, what are my tax implications this year? What does my estate plan look like? Am I going to be able to leave my financial picture to my next generation? These are all questions that we get into, and I think it's really just the quality of service that we provide. We tend to think of our clients as members of our family, members of the Apex family, and we are members of their family as well.
So what else makes Apex unique?
We think our tax planning strategies, we actually review our clients' tax returns every year. We actually ask that they send us the draft copy before they turn it over to the IRS, because many times we'll find errors, which is very highly unusual. And also what makes us unique is being able to offer tax advice to clients. So we literally, in addition to reviewing their tax returns, suggest strategies that can reduce their taxes. And in addition, we do a complete estate plan and a complete personal financial plan where we prepare balance sheets for clients, we prepare a complete net worth statement, we do a projected tax analysis for them for the current year and perhaps ensuing years. Mm-hmm. We do a number of different services that we think are rather unique in the industry.
Mm-hmm. And I'll just add that being an independent registered investment advisor, we don't have any corporate constraints. We don't have any self-interests. We don't have a cookie cutter approach to financial management. We take a really in-depth focus on the actual needs of our clients and what drives them, what motivates them. It's really important that we provide that interpersonal service, and they're not going to get that at many other shops.
Mm-hmm. So there's something else about Apex that's unique too.
There is, and before I just get into that, if I could, I would suggest that every single individual out there who has some substantial net worth review their legal documents. And most people have done legal documents perhaps 10 years ago, 20 years ago, have not reviewed them. When we meet with a new client, we typically will review complete wills, powers of attorney, living wills, trust documents, if they're the beneficiary of a trust, and we can at that point make recommendations to that client that perhaps they should see their estate attorney and have a re-review with especially the change in the most recent estate tax laws, now raising levels up to over 11 million per individual, so 22 million per couple. It has reduced the need for many of those so-called AB trusts, and if you can remove some complexity, then I think you're much better off, and we'll look at that for clients in addition.
So many advisors that I know are people who manage portfolios that are primarily made up of stocks and bonds, either individual securities or funds. But you guys are different in alternatives in one unique way.
Sure. So we view the investment landscape as having three different buckets. You have your equity bucket, your fixed income bucket, and we really think the third leg of the investment stool is real estate. About 18 months to 2 years ago, we started putting together private real estate partnership investments. These are friends and family deals, really, for our clients and other accredited investors to get the benefits of investing in real estate that they wouldn't get anywhere else. And that's sort of a unique structure that we provide that you're not going to find anywhere else.
I'm interested in hearing more about that after we take a break from a word for our sponsors. I'm Bill Borton, your host of Live Better Longer. We'll be back in a moment.
Is your business growing and now you need a new and bigger building? Has your organization outgrown their facility and now it's time to expand? Do your hobbies require the need for more space? If you're paying rent, but now you want the advantages of owning, the prospect of financing, construction, and on-time completion may seem out of your reach. General Steel Corporation has the answer. A pre-engineered steel building from the General will not only look great and satisfy almost any need, but you'll save time and money. Our team will help you create your building and deliver it to your location. We offer design services to help you present your concept to board members, bankers, or for fundraising. And the General can even help with financing. General Steel is a name you know, with quality backed by a 50-year structural warranty. Call today and find out how easy it is to have the building you want. You may even save up to $20,000 with rebates. If you need space, you need the General.
Seniors want peace of mind and a free prescription discount card? Keep listening. Are you age 85 or younger? Here's an important message to you and all seniors from Final Expense Direct Insurance Services. The average funeral now costs over $7,000, and the most government benefits will pay your family is only $255. Our senior plans start as low as $1 per day and will pay up to $30,000 for funeral and other final expenses. There's no medical exam, and you'll have lifetime coverage. Plus, your rates will never increase, and your plan cannot be canceled as long as you make your premium payments. Get your free information about our senior plans. Just answer a few simple questions and get approved right over the phone. Plus, call right now and you'll receive a free prescription discount card.
Call 855-223-7661. That's 855-223-7661. 855-223-7661.
Welcome back to Live Better Longer. I'm your host, Bill Borton, here with Bob Connell and Joe Weidenburner from Apex Advisors in Yardley, Pennsylvania. So, you guys are financial advisors who invest in real estate?
We are, Bill. I have personally invested in commercial real estate for over 35 years. And we decided a number of years past that we would introduce that facet to our clients so that they could invest directly into real estate and really reduce the associated costs with buying into REITs, and we'll discuss that in a little bit more, or some other private investment funds. They all have advantages and disadvantages. I'll turn it over to Joe here just to speak a little further.
Well, we built on Bob's experience investing in commercial real estate to look at larger commercial investment opportunities. Again, we look at this as an opportunity of where are we going to find the best returns for our clients and for our investors. With the equity markets at 10-year highs, it's been going up for the last decade, volatility has returned. His recent past has shown that you weren't getting the type of fixed income returns that some investors were used to in the past.
And may not for a long time.
Correct. So it's our responsibility as a financial advisor to determine what's the best opportunity for our clients going forward. We devised a way to form individual LLCs to hold commercial real estate, and invest our clients into those entities. What we like about it is it provides our clients a good bit of current income. We target 7 to 8% cash flow returns. We look to build 3% or more in amortization and depreciation, and we are conservative in our estimates, setting aside about 2% for reserves. This is the type of return that we're not finding elsewhere, and we thought this was the best means to make sure our clients were not only secure with their money, but also could benefit from the traditional upside in commercial real estate.
So this is not a REIT structure, is that correct?
That's correct. It's not a REIT. These are individual partnerships that we feel clients are much better off directly investing in one, simply because there's no markups, there's no commissions. As Joe had stated, it's a really family and friends type of arrangement. Our clients basically invest the same as if it was my mother investing. And we feel that that's a much better structure. You've probably read about private REITs that have large 8 and 10% commissions. We have no commissions, there's no markups, and unlike a regular REIT, we have all the tax advantages passing through to our clients. So in our current projects, we're generating the 7 to 8% cash flows without any taxation to the clients, basically due to depreciation.
So now to get involved with one of these, someone has to be an accredited investor, correct?
They do. Accredited investor, as defined by the legal statute, is someone with a net worth exclusive of house of $1 million or more, and or a $200,000 income, because that's generally the accepted level where they could accept this additional risk, because real estate is illiquid, and we stress that to clients. But for a piece of a client's portfolio, and where you can generate that type of income and have upside potential appreciation, and you have mortgage amortization because we're paying off a mortgage on it, and you're generating typical returns of close to 13% when you're looking at all-in types of returns without appreciation. So we feel that's very comparable type of return that most people would want. And we personally invest. Apex principals invest their own money in each project because we feel it's one of the best places we can have for our funds.
And eating your own cooking is always a good thing too.
Most people are the old, what they call skin in the game.
That's right.
And we believe in that. So.
And our clients benefit from the fact that we're hands-on real estate managers. We take care of the property management, the partnership formation, everything in-house. We are looking at these as longer-term holds, right? We're trying to put our client capital work for a longer term, as opposed to a REIT or some other private real estate investment that might be looking to flip in and out in a shorter-term duration. The investor money that we're putting to work is meant to be for the long term. So they're generating that coupon every year, and they can be sure that their money is into an asset that hopefully is appreciating over that long term.
Well, the investors are partners as opposed to being a means to someone else's end.
Correct.
Correct.
No. Is there a minimum?
We generally have a $100,000 minimum for our capital stack. We raise investment in two forms. We have the traditional limited partners that are equity investors in the LLCs that invest in these real estate entities. We also have a note structure for some of our investors who have a lot of qualified retirement money that's sitting in their IRAs. They can essentially participate in equity-like cash flow returns, but without the issue of UBTI, unrelated business taxable income. The IRS says that you cannot own leveraged real estate within a qualified account like an IRA, because if you do, then you're actually performing a business function in that, and they're going to tax you. That sort of defies the purpose of qualified money. So what we came up with, and Bob is the visionary behind this structure, that investors can issue a note to the partnership. They will get a equity-like cash flow, 7.5% to 8%. The note will essentially be coterminous with the duration of the partnership, the investment opportunity, and they're benefiting as if they were equity partners, except they're not.
And in addition, if I could just add, because it's a note, it has a defined maturity, And because some people have a concern because of IRA and required minimum distributions, we found that having that note structure and having the semi-annual coupon interest come into their IRA, we found for most people that that actually allows them to meet their required minimum distributions because it's 7 or 8%, which generally is going to meet a required minimum distribution requirement in terms of percentage of assets that you have to distribute. So we've set this up to really be ideal for IRAs and potentially profit sharing plans, foundations, nonprofit organizations, charities. They all have the same restrictions on the ability to invest in leveraged real estate, or should I say, not having the ability to invest in leveraged real estate.
I'm going to be interested in asking a few more questions about this after we take a break for another word from our sponsors. I'm Bill Borton. We'll be back in a moment with more Live Better Longer.
Everybody wants cheap airfare, but where do you find it? You call low-cost airlines. They specialize in cheap flights, discount hotel rooms, cheap car rental rates, and with a best price guarantee. If you want the lowest prices on your airline tickets or other travel services, call now. That's right, call. That's the only way to get these rates. Experts are standing by 24/7 to get you the cheapest airfare and hotel rates available. So don't wait. Call now.
Thousands of people contact General Steel each month for a pre-engineered steel building. Business owners who need office, retail, manufacturing, or storage facilities. Leaders who need churches, schools, and gymnasiums. They all want the same thing, the advantages of owning. To build quickly and save money. Quality, backed by our 50-year structural warranty. And they all want to work with a name they know, General Steel. Call us today for the building you need and save as much as half the cost and time of conventional construction.
Is your business growing and now you need a new and bigger building? Has your organization outgrown their facility and now it's time to expand? Do your hobbies require the need for more space? If you're paying rent, but now you want the advantages of owning, the prospect of financing, construction, and on-time completion may seem out of your reach. General Steel Corporation has the answer.
A pre-engineered steel building from the General will not only look great and satisfy almost any need, but you'll save time and money. Our team will help you create your building and deliver it to your location. We offer design services to help you present your concept to board members, bankers, or for fundraising. And the General can even help with financing.
General Steel is a name you know, with quality backed by a 50-year structural warranty. Call today and find out how easy it is to have the building you want.
You may even save up to $20,000 with rebates. If you need space, you need the General.
Seniors.
Welcome back to Live Better Longer. I'm your host, Bill Borton, here with Bob Connell and Joe Weidenburner from Apex Advisors. So before the break, we were talking about the equity positions and the note positions in your commercial real estate investments. So am I correct in understanding that the equity positions are primarily for people that are looking for capital appreciation with income, and that the notes are for people that are looking for income with tax advantages?
That's correct. So our equity partners are getting the benefits of the cash flow that we're generating from the properties. And as we've said before, we target 7 to 8% annual cash flows. They're also getting the benefit as equity partners of the mortgage amortization and the reserves that we're setting aside. So we're targeting that low, that 13 to 15% IRR for the equity investors. They're also going to get the benefit of any appreciation in the property at the end. Whenever we dispose of an asset or end the investment, the equity partners are going to benefit in the appreciation that we received with that. Whereas the note investors are generally getting the current income, which is going to be similar to the equity cash flows that the equity investors are receiving, but they're also getting the tax advantages of being allowed to hold these notes in their IRAs and other qualified money. The benefit of having the structure too to the equity investors is that since our capital raise is divided between the equity and the note investors, the equity investors will get the benefit of having more depreciation, more amortization effects. So there's tax advantages to the equity investors as well.
Now, when a lot of people think about investing in commercial real estate, particularly REITs, they're thinking about multifamily housing, shopping malls, things along those lines. You guys don't go in those places, do you?
We don't. Actually, we have a nearby project. One of our projects was a BJ's over in Maple Shade that we put together for clients. Plus, we have an office building in King of Prussia. We have an office building in Malvern, which leads into our next conversation is what are we looking for in terms of real estate? And primarily, we're looking for great locations that will support the type of businesses in there, whether it's a BJ's over in Maple Shade or whether it's an office complex with medical companies in it that need that type of space. So primarily, we're looking for the correct location. And then, quite frankly, the most important asset we have is our tenants. So we want to make sure those tenants are happy, that they are really aligned to the area. So if it's a local commute, what have you. Joe mentioned that, as we said, our most important asset is these tenants because they're paying the rent. So we want to make sure that they want to be there for a long time, and we're looking for capital appreciation because we typically have rent escalations. So we expect those cash flows to be able to go up, and we also expect the value of the real estate to be able to go up, simply because those rental incomes are expected to continue to increase.
Now, I know you've also told me in previous conversations that you're looking for tenants that are more recession-proof wherever possible. Their businesses are going to be in demand regardless of the economy.
Very much correct. We feel, as an example, for a BJ's, we just think, or whether it's Sam's Club or what have you, we feel those warehouse types of clubs are more recession-proof because if people are looking for better pricing, that's actually where they're going to shop. So we don't think that Amazon will affect them like many shopping malls have been affected on a negative impetus because Amazon is a big player in people shopping. But we feel the warehouse clubs really sort of stand out by themselves and differentiate themselves from the general retail market. So we also are finding that we want to find good value when we buy a property. We want to be able to generate those cash flows. We look for below market rents. So we're looking for a lot of attributes in a property that we can find for our clients and for ourselves that will meet those cash flow needs, that future appreciation needs, and will really be a great investment for them. So those are really what we're looking for.
When you say you're investing in commercial real estate, people automatically think you're just investing in the building itself, in the structure. It's tangible. People like the benefit of going to be able to see what they're investing in. But we take a different approach. We're investing in the tenants that occupy that building. We're investing in the future ability of the occupants, the tenants, to produce cash flows that we can then return to our investors. So the benefit that we have of being a hands-on manager, as a part of our due diligence, we'll go interview every tenant at a building that we're looking to buy, because this is an investment that we want to make sure our clients and other investors' money is going to be protected in. We want to make sure that the tenants will stay, that they're going to continue to pay their rent, because what good is an investment in a building with no tenants? It's not. We're not going to generate the type of returns that we're trying to return to our investors. So we take a very hands-on approach, and that's truly the value that we're able to add with our management of these properties, is we look at things that other larger private investment funds and REITs don't look at. We take the time to understand every possible term of a lease of the tenants. We take the time to understand what it is they're looking for and what they want to make sure that they're happy and that they're going to stick around. Because at the end of the day, as Bob said, the tenants are our biggest asset in these commercial properties because they are the key to ensuring that our clients and other investors' investments work out the way that we're anticipating.
Yeah. Well, the cash flow and the
Correct.
escalating rents are critical.
Correct.
So obviously you want to underpromise and overdeliver, or at least meet the expected promises. But no, of course, no investment is entirely risk-free.
Right.
But you guys sound like you're really doing everything you can to manage risk. And as you said, you have your own money in these properties. So you've got skin in the game and a real interest in making sure that you connected all the dots.
We do, and I would honestly say we do a phenomenal amount of homework. We interview tenants before we purchase a property. We do surveys. We do property inspections. We hit all the high points to make sure that the property is what we expect it to be. And we think that's an important part of our process. And because we do just one-off projects, we're not trying to invest $1 billion at one point. We feel we can just do a much better value add.
So if somebody wants to learn more about Apex or about your real estate opportunities, what's the best way for them to get in touch with you?
So it's probably on our website. For Apex Financial Advisors, it's www.apexfinancialadvisors.com. That's one word. You can find how to contact us through phone and email on there as well. And for our real estate division, it's AFA Real Estate Partners. And the website for that is www.afarep.com.
Thank you. Well, gentlemen, it's been a pleasure having you on Live Better Longer. Thanks for coming. This is Bill Borton. I'll see you again next Tuesday at 11 for more Live Better Longer on RVN TV. Thank you.